Welcome, everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading futures markets using the Viper tools, you are absolutamente in the right place. Tonight's topic is detailed mid-band trades. So without further ado, let's get this puppy started. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody does know that you do trade at your own sole discretion. As I mentioned, tonight's topic is detailed mid-band trades. So let's jump over here to a couple of ES charts. Just as I was preparing for the webinar tonight, I threw a couple of sim trades on, and I wanted to share those. Let me get over to screen one real quick here. They were in the green, and I was hoping to show how to manage them, but they kind of flipped upside down. But that's okay. I'm gonna use this to sort of kick things off and explain how to look at the mid-band area. These are sim trades. Like I said, I just threw them on here, and actually at the time I put these on, you can see here that they both went down and did a double bottom down here, which obviously you can see that I should have put a target down here, and these trades would have been done a long time ago. But I let them flip because it's going to show a couple of things. Now, before we get into the details of these two sim trades here, I want to talk about what you're looking at in regards to the structure of the charts themselves. Okay. For those of you who are brand new or visiting us still this week, welcome to all of you. I think you're going to learn a lot here. They're going to give you a lot to take away from this webinar tonight. We are connected to a data feed to our broker, NinjaTrader. In this data feed, we get the futures instruments. This is the E-mini S&P. Its value is $50 per point. So each point of movement is worth $50. And each tick, since there's 4 ticks per point, is worth $12.50. So each tick of movement is $12.50 on the E-mini S&P. Now, we trade other instruments. Most of you know, of course, we trade crude oil, which is a most excellent instrument. I would suggest that you take a look at it. We trade gold. Very good moves today, for instance, in the volatility on the equity markets push gold all over the place. So that's an instrument you should definitely check out. Now, NASDAQ is the tech futures. Can be a little spastic. We used to have it in the room. We don't anymore. For that reason, it was very unpredictable, and we had to sort of babysit it. Although there are people who still trade it and make money. Yeah, I know. I don't trade crude that much. I haven't flipped it, but I can. I'll do that later. And then the other equities we watch are Russell in the room. It's become a little spastic lately, so you got to be careful with that one. It's $5 a tick, and YM the mini Dow. Okay. I'm going to go ahead and close these positions out and then talk more detail about, just close the sim thing out. Just get it off of there. I don't want to confuse the topic. Now, at an overall level, I think this chart emulates what we try to teach on many different levels, and let's look at it this way. By virtue of the fact that we have traders that trade with us for many years all over the world, we have to show lots of different trade setups on lots of different instruments, and they're good trade setups. You hear them in the room. Minimum criteria was met. That's a good trade. Deep retracement, good trade. Phantom trades. We used to have probe trades. There's all manner of trades all over these charts, all day and all night. Now, I would say that, and I'm just going to put this up here so that you can sort of ponder on it a little bit as we move forward. And I would put it together something like this. To become a long-term, I'll put it this way, well-balanced trader, you would need to look at having in your sort of trader toolbox, if you will, many different trade types that you can take long term. Okay, and what I mean that is as you grow and mature as a trader, that you, into your trading repertoire, you're able to pull in many different trade types. And when I say that, I mean the shallow retracements, the minimum criteria, the deeper retracements, the probe trades, all kinds of, you just have all kinds of different trades, because that gives you, it's kind of like a carpenter or a skilled craftsman building a house, and take one craftsman or carpenter or whatever, and he's got a hammer. He opens his tool chest and there's a hammer in there, and that's it. Okay, and then you take another one, and he's got all manner of tools in there. He's got a skill saw, you got screwdrivers, and he can build anything, right? So it's kind of like that with trading. But that being said, we feel that one of the best trades to learn on, in other words, let me add to this and go one step further, where you would say you need to build a foundation. Much like the house analogy, you're not going to start putting a roof on the house before you got to start with the foundation and the walls and and then you get the roof. Well, it's very similar in trading. You have to have something that is your sort of core go-to trade. And our feeling is that foundational core trade might want to be the mid-band trade. And that's why I'm dedicating this entire hour to talking about mid-band trades. Okay? And just to be clear, I'll say this only once. I'm not disparaging the other trades. I'm not saying you should not learn the other trades. If you feel you already have a good foundation in a mid-band trade, go learn the other trades. Absolutely. In fact, you can practice them in sim. I encourage you to do so. But if you want to just start off and say, okay, look, I want this to be really simple. I just want one thing to do, and when it happens, I want to get really good at it. Then we think the mid-band trade is a good start. Okay? So with that premise set forth, let's look at what a mid-band trade is. Okay? Mid-band trade, whether you're getting long or short, must be in this area. I'm going to show a short version of it, and then I'm going to show a long version of it. Can everybody see the bands immediately above and below the mid-band? So let me back up for a second before we dig down deep into the core of what we're trying to get to here. So with this data feed, we have 4 range data coming in through the feed. And if you didn't have these indicators on here, you would just see a whole bunch of bars kind of going up and down. It would be very difficult to see where to get in, long or short, in this market. So what we did to help visually see where to take trades is we created background colors, red, green, and intermediate. When a market is heading down, generally the background is going to be this red color. When a market's heading up, it's going to be this green color. Pretty straightforward. The bar colors are blue, yellow, and red. If you notice when you get thrusting or even some retracement moves, in the case of the downtrend, the bars will primarily be red. And if you notice when you start to hover around the midband itself, the bars generally turn yellow. Now the yellow color does not mean trend change, just to be clear about that. Okay, it simply means it's a clue visually. Market is making a retracement, and it's around the midband, and you're trying to look to take a trade. Yes. Now come over here. Conversely, on the upside with an uptrend, the market will initially do a thrust in the up direction, like such. The background will turn green. The midband and all the bands will start to stair step up, like you see right here. When there is a thrust or a push in the market, you will notice that the bars are primarily blue. And then when they retrace to the midband, they can turn that yellow color. So by definition, so we're not confused about this, the bars have to be located either right on the midband itself, as you see right here and right here. They can physically sit right on the midband itself. Okay. There are times when the market will come within the band under the midband. In the case of this short rollover right here, this is still considered a midband trade, even though it just wicked the midband itself and rolled over. That's a midband trade. This is a good example of a midband trade sitting on the midband itself right here. And then it can go slightly above it into the band above the midband here. So this is a good example on the short side where you're heading down to take short rollovers in 3 different conditions. Can everybody see that? Above the band above the midband, right on the midband itself, trend is down, so we're shorting, and into the band just under the midband itself. These are 3 good examples of acceptable midband trades. Is there any question about the short side? Everybody sees it. So we have to be, before we can go look at various trade setups, which we're going to all do together, we have to have crystal clarity on and let me just put it this way. In regards to the definition of a true midband trade, if the bars are outside of these 3 conditions, by definition, it is not a midband trade. So I want everybody to be clear about that, right? If it is outside here, here, and here on the short side, and here on the long side, this is a case of wicking the midband and coming into the band above it on the long side, right? Very similar, going in the other direction. Here's an example of some bars sitting right on the midband itself. Very acceptable. That's what we'll call that on. Maybe we should have above, below, and on. Maybe that's a good way to think of it, right? Above, below, and on. Now, as I said earlier, there are other trade types. But in regards to the midband only trade, it must meet these 3 conditions. So let's do a pop quiz to make sure we're all clear before we move forward. I'm going to do a series of questions, yes or no, 5-second questions, where I'm going to pop up trades. And they're going to be either it is a midband trade or it isn't. Okay, I'm going to pause the screen. And in this first quiz, you don't have to say whether it's long or short or where you're going to get in or how you think and all the thing. We're not going to do any of that. It's just going to be a yes or no question. Okay, we're going to keep it really super simple. Okay, I see several conditions on ES here that we're going to look at. Going to be really, I'm going to do a whole string of them real quick so that you can pick up on this. Each one, you only get 5 seconds, and when you reply, you're going to type in a Y for yes, meaning that it meets the criteria as a yes, or N, no, it does not meet the midband criteria. And we'll just do a series of real quick ones. Okay, you ready? Here we go. Here's the first one. Okay, let me do trade number 1 question. Is this trade setup here a midband trade, yes or no? 5 seconds on the clock. That's a Y or an N. Is that a midband trade, yes or no? Now, after we do this exercise, we're going to go look at some actual trades from this morning. Okay, so we're just sort of, getting everybody familiar with what you're looking at. so that when you see it on a chart next time, you'll know what to do. No, Brian K., that wasn't the question. The question is it a mid-band trade, yes or no? It's a simple Y or an N. Boop. 2 seconds left. Y or an N. Boop. Just hit it. Either it meets the criteria or it doesn't. Oh, okay. I missed that earlier. Okay, sorry about that. Time's up. No. Question number 2. Is this trade setup a mid-band trade right here, yes or no? 5 seconds on the clock. 4 seconds. I'm going to pop through these real quick. I'm going to make sure you're seeing them or you're not. You're seeing them or you're not. So there should be no question. I'm trying to keep them as clean. There's not going to be any ambiguity about it. 3 seconds. Yes or no? Either it is or it isn't. 2 seconds. Y or N? 1 second. Time's up. Okay, good. Yeah, everybody got this. This is entered. So to circle back here, this retracement did not enter into the band above, on, or below, on, or above the mid band. So this was a negatory. Now we have another trade called, just as an aside, so you're informed about this, but it's not the topic of this webinar tonight. This would be a minimum criteria trade on the downside because it came into this band above line 2, but that's not what we're talking about, right? This, on the other hand, was a yes because it kissed the mid band and went into the band just below it. Okay, let's look at some long examples. Five seconds on the clock. Is this a mid-band trade, yes or no? 5 seconds. Three seconds. Just a Y or an N. Either it meets the criteria or it doesn't. Is this box a long mid-band trade, yes or no? 2 seconds. One second. Ready? You got it? See some people squeaking under the wire last minute. Time's up. No. Now, let me explain why. Because there was, I was so impressed over here that everybody was getting these right, but now then we got kind of a mixed bag of answers over here. And let me address that. I kind of had a feeling that would come along, and it's okay. This is part of a learning process. It happens all the time. No big deal. Now, when I say that the candles have to come into the band above, on, or below, just so we're all on the same page, and this is the way we look at it, that doesn't include a candle wick like that. That is a no. No, you can't use the wick. I'm not saying the wick doesn't count. Let me just put it a different way. The preponderance of candles have to be present in the lower band itself. And one little wick on one candle does not constitute a mid-band trade. Okay? Just so we're all on the same page. I know some of you are seeing this for the first time, so it's totally cool. Don't worry about it. The preponderance of candles are right here. Once again, this is a minimum criteria trade, but we are not talking about that. Okay? Everybody get that? Okay, I'm going to throw 3 in this next one. And ready? I'll give you a little bit more time. I'll give you 10 seconds on this one. 1, 2, and 3. So you type in a series of. So it would be if you believe that all 3 are yeses, you would type Y, Y, Y. If you believe that 2 were, I'll just give you an example, as that might not be true, N, N, Y. You know, N, N, Y, N, Y, N, 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 Y. Any 3 combinations. So this is a triple question, so I'll give you 10 seconds. Is each one of these retracements in this overall uptrend, mid-band long trades, YYN and NY, however you want to do it, on the mid-band correctness, if you will, in the placement of the retracements for the preponderance of the candles inside of each of those boxes. I see some good answers coming in here. Some no yeses, a couple of yes nos. A lot of okay. Let's give you 5 more seconds. 3 different boxes. Remember the criteria. Preponderance of candles, not wicks. Wicks don't make a trade, right? You need more than a wick to get a trade, right? Time's almost up. 2 seconds. Type in your series of answers. If you're saying all yes, okay, all right. One second. Try to squeak your answer in there. Three boxes. What say you, team? All right, time's up. Okay, so the first one, we'll call this trade number 1, is definitely a yes. By virtue of the fact that you are in the immediate band above the mid-band, and actually, technically speaking, this bar right here sits physically, these two are physically right on the mid-band itself. Definitely yes on number 1. Okay? Number 2 is a yes. We have a preponderance of candles sitting directly on the band and oscillating between the band above it and the band below it, and it is, by the way, respecting the band below it for a beautiful little pop there. Now, this third one is kind of on the fence. Now, here's why. If you had looked at it and said, well, you know, Charles, here's a series of candles that sit here. There is a box that came down, and some of the candles are in the box band below it. And if you sort of extended your view beyond just this box itself, you know, it did come back up through here with bars that sat on it. So this is kind of an on-the-fence one. Some of you, a lot of you said yes, and that's okay. I can understand why you said yes, because of the position of some of the bars. A lot of you said no, because by virtue of the fact that these 1, 2, 3, 4, 5, 6 red bars extend beyond this band right here down into the lower band here. So this is actually technically a deep retracement, sometimes called a phantom trade, different names for it, depending on your view of it. So from a technical definition point of view, it's gone deeper than a mid-band itself. It's a legitimate long trade, I'll give you that. It's a deep probe or a phantom, whatever you want to call it. So its trend is still up, and it's a good long trade, but it doesn't meet the technical specifications of remaining in this band itself. So by that definition, it's a no. So the correct sequence on the series of trades was a yes, yes, no, to meet the definition of the mid-band trade itself. So we're all on the same page here, okay? Just like this one here, where it didn't come deep enough, that was a no. This is a deep retracement. So if we need to be technical about how we define this. It goes deeper than the mid-band. This is a deep retrace. So from a midpoint point of view, it's a negatory. Okay? Now, let's come look at this morning. Oh, hey, by the way, I can do a couple more of these, or we all feel like we get this. Any questions? Can we move on? You good, Bob? All right. Everybody good? I think the better question is, does anybody need more definition of what a mid-band trade is, or are you comfortable with it? Because I'm going to go ahead and clean these charts up. Great examples, good explicit clarity. Let's move on. Okay, good. All right, perfect. Drawing tools, remove all drawing objects, clean chart, and we're going to look at this morning. Okay, here we go. Let's go back to the open. Let's talk about the open and how you can start making some money, because that's why you're here, right? Let's go talk about making some money. Oops. Thought I turned my phone off. Stand by 1 second, please. Sorry about that, everybody. Sorry about that, everybody. My apologies. My apologies. I thought I had that thing turned off. In fact, I'm going to turn it off right now. That was the wife. You know, when the wife calls, you got to pick up. That's how that works. Happy wife, happy life. Everybody knows that, right? All right, I don't want to get off topic here. Let's get back to the subject at hand. Okay, let's get back to the open here. Stand by. You are forgiven, Grasshopper. Now, here we go. Let me ask you just a general question and see if we can all get on the same. I'm going to pop open the ES chart right at the open. Stand by. I'm setting it up right now. Are there times in a market condition where trading the mid-band might not be a good idea? You don't have to say what that is, but that's just sort of an open general question. Is there times when trading a mid-band might not be a good idea? That's sort of a yes or no question. Give you 3 more seconds on that one. Are there times where knowing that you maybe shouldn't be taking a mid-band trade is a good idea to not take it? Yes, that's correct. In a range. Many times in a range. Now, what we're going to do is I'm going to show you a series of conditions where taking a mid-band trade might not be a good idea. Let's look at this chart right here. Now, we have mentioned on several occasions that trading the first 5 to 10 to 15 minutes on ES can be a good idea, and sometimes it cannot be a good idea. And let me explain why. If I was to put a volume indicator on here, a volume bar indicator, you would notice over here in the pre-market session that the bars would be tiny. For ES, they'd still be maybe, 5,000 contracts, 2,000 contracts, 1,000 contracts, which by definition, in terms of some of the other instruments, is still a lot. Okay, trades 1.5 million plus a day. And then over here, when the market opens, you would see a huge spike in volume like that. So over here, little inky tinky bars, like this. Later on I might actually do it. Just pull up an indicator for a second just to show you. Here, stand by. Let me just for the heck of it, just for giggles, see if I can get a quick thing up there just to make my point. Now, the reason I'm going to show you is the question is the pre-market volatility necessarily an indicator of what's going to happen in terms of trading that morning? And the answer is sometimes it is, like you'll get trend follow through, yes? And many other times it won't be. You'll get when the volume starts to come in, the big boys start pushing it around. Here we go. Let me just throw it up here real quick just to make a point. Much of the volume starts to come in after 6:30. But that's not to say you can't trade the pre-market. Sometimes, especially like in crude oil and gold, there's good moves early in the morning. You know, you can catch a good move right before the market opens. A lot of time traders are done before the market even opens because there's just such good volatility. And if the liquidity is good and the spreads are tight, you can make some money there. Oh, this volume thing's locking up my chart. Spinning top, not good. Spinning top. Oh, I shouldn't have done that. A dumb move. My apologies, everybody. There you go. There you go. There you go. Yeah, so see here to the right, these huge spikes in volatility. These bars up here, this is like 4,000 contracts, you know, in the span of like a minute. You know, over here, can you see the volume's much lower over here to the left in the pre-market session? And see how it ramps up over here to the right? Yeah, so let me just minimize that. It's not relevant to what we're doing. I was simply trying to make a point that, you know, clearly you can see that in the pre-market session, you were in a downtrend where you were shorting rollovers, right? And then you get a spike up, you get a little bit of up action here, and then you get a little bit of down. And so what's happening is all these orders, all these pent-up orders and buy and sell programs and all that sort of stuff are sort of, you know, flushing themselves out, and the market's trying to decide where it's going to go. And so as a result, you know, sometimes you can get upside down in a hole. No, I don't use volume at all, Lewis. I haven't for many years. I just was trying to make a point there. That the actual trend resolution itself of where you want to be getting long and short and taking pullback trades may not really, you know, be present until after 6:45, 7 o'clock. We're going to look at that today. Jiminy Christmas. I just try to take volume off when it's locking it up. Don't use volume. It really doesn't. It's not relevant to the trade decisions. You're going to find that the swing levels are much more relevant to what you're trying to do there. It's a dumb move. Not going to ever do that again. Look at that, all locked up. What the heck? You got to be kidding me. All right, there it is. So let's make this exercise easy. I'm just going to do a series of, well, that's true. Volume sounds good in theory, but the market can sure rise on vapor. Yeah, let me get it back up. It's fixed. Remind me to never do that again. That was a dumb thing. Yeah, you know, you can get big bars, small bars, you know, and you know, all sorts of VWAPs and all manner of things. I've seen them all over the years, trust me. And it does, the price action and the swings really make the difference in how we take our trades. Does everybody see the chart now? It's fixed. The volume's off, so it's not relevant to what we do. Okay, let me ask some questions here on some trades here in the morning. You don't have to call the long or short. I'm going to do a whole series of quick ones. Ready? I'm going to do 4 of them in a row. And here again, we're going to do a yes, yes, no, no, yes, yes, no for 4 consecutive trades. $10 seconds on the clock, 4 question marks. So this would have been right near the open. 6:30 is here, so here you're at 6:32, 6:34, 6:37, 6:39. You got no, no, yes. No, yes, no. So the yes and no is relative to, does it meet the definition of mid-band trade, yes or no? That would determine the sequence of your yes, yes, no's, no, no, yes, yes, no, no. Whatever the sequence is, we'll give you another 5 seconds to identify your feelings on these 4 trades within the first 10 minutes of trading ES this morning. Now, while you're typing that in, I do have to say there are other instruments you can look at. Like I said, you get good moves on crude. Crude's been so well behaved lately. Sometimes you can see a good one on gold. Russell has some trades when it behaves itself. We think a good instrument to start learning on is ES. ES midbands, if you want to build a good foundation of trading, is a good place to start. And that's why we're focusing so much effort on here. Whether you're new, or you got some experience, or you're sort of middle experienced, or you're advanced, never hurts to go back to have a good go-to trade. All right, time's almost up. 2 seconds. Well, I'm going to address, there's several questions in regards to direction, and I'm going to talk about that. Yeah. Right, 1 more second. Interesting mix of answers here from everybody. That's really interesting, I'll tell you. All right, time's up. In my view, you had 4 yeses. Yes, on the midband itself and the band above it. Sitting on the midband itself doesn't get any better than that. That's definitely a yes. Same thing here. It's respecting the band above it and below it, and many, many bars sitting right on it. Textbook perfect. 4 yeses was the correct answer. 4 midband trades. Now, there are several questions coming in from many of you as to what would be the direction on the box. Let me answer it this way. In the case of this scenario right here, you were coming off of a downtrend and you had a thrust up, like such, turning the background to a different color, and the midband was holding as support. Could you have let these boxes go either way? Yes. Now, in the case of box 1, 2, and 3, you would have gotten 3 long trades. In the case of box number 4, you would have gotten a short trade. Now, the only times that this is really permissible is if you're in this window of like the first 30 to 45 minutes of trading in the equity markets, okay? Because in the first half an hour to 45 minutes, markets can go up, they can go down, they can go sideways. And so if you want to capture all the trades, you can let boxes go either way as long as you box them appropriately so you don't get faked into trades you don't want. In this case, for instance, if you felt the trend was up, you would have only engaged the long side here, in which case you would have missed the short. That also happened over here. Let me give you a couple other examples where this occurred. Right here was a very clear, legitimate short trade right there like that. By definition, is this area right here a midband trade, yes or no? 5 seconds. We're just identifying trades right now, okay? We'll address the directional issues and getting in and all that sort of stuff. We'll talk about that in a second, and how much each of these trades is actually worth. We'll get to that. I know you're chomping at the bit to get there. We're working our way there. But you got the first thing to do, you got to walk, you crawl before you walk, right? You got to be able to see the trade and clearly identify what it is, and then you can jump up and start running, right? By definition, is this a midband trade, yes or no? 4 seconds. By the definition, right? Yes or no? Midband trade, per the technical definition of it, yes or no? 2 seconds left. One second. Most of you are getting these pretty good, by the way. I get a lot of good audience participation tonight, so total kudos to everybody for participating. To the extent that what I've seen over the years is the traders and the folks who actively participate in these webinars usually do pretty good, because that when you engage something and you type or you write or however you engage with it, you learn, it goes into your cranium and sticks with you better. Sort of like repetition on patterns and what have you. You see it again, you see it again, you see it again, and then that stuff becomes crystal clear what to do with it. So by definition, this is a negatory. The bars are outside the band immediately above the midband and the band immediately below the midband, and this would be a no. This is a deep probe trade, short. Right? So the bars are outside. Here's a yes, and here's a yes, and here's a yes. Now, by this time over here, I can't recall if we had news this morning, but we did have Fed funds rate, and this happened pretty quickly. And technically speaking, I don't know that we caught this in the room. And at the time this midband box formed, you have to look at the condition that was present at the time, and the condition that was present at the time that box formed right here. Notice how the background was red. You were in a shorting condition. If you had not enabled the long side and you were looking for strictly shorts, you never got filled short, and the market just ripped up right here like that. Now, you might say, well, you got an ABC condition here. There was maybe a spot to get in when it pulled back, and that's true. But you got to imagine this. I remember seeing this. I was trading ES, and I was looking for a short roll over here. So what I'm saying ABC is that you pop, if you had long enabled out of the box, the region box or a limit order, however you got in, you'd be filled long on the close of this bar right here. And the ABC condition is this one right here, where you get the pullback, checks the breakout area right here like that. See these bars right here? Would that have been another chance to get in? But this all happened like a minute. Yeah, these are midband bars. These are all midband bars. Mm-hmm. Yep. I mean, this is like a minute. I mean, it just shot, pulled back, deer in the headlights, off it go. I remember watching it just run, and kicking myself. And while it was up here, does anybody remember this in the live room? What did we say when it was up here? Don't chase it. And we said if it pulls back anywhere around 98 and bounces, we're going to get long. Anybody remember that number? So what are we talking about? ES is all the way up here to 04. What are we talking about 98? Why would we even talk about 98 relative to 04? Anybody see any reason why we would say 98? And the market's up here. Anybody have any idea why we're talking about that? Or are we just crazy? Just trying to say stuff in the room to throw you off? Market's way up here at 04. What are you talking about 98? 98's a mile away from here. That's a midband trade. That's right. Where's the midband sitting? Well, this market's right up here. Everybody see where it is? Right here. I can honestly tell you that when ES is behaving itself in a very nicely trending type move, if you focus your eyes on that midband and you just wait until it gets in and around it and you take those trades, I can't give you an exact percentage, but it's an extremely high percentage that if you're in a good trending move and you bounce off that midband like in an up trade, you're going to get a great trade. The key here is that you got to sit on your hands and patiently wait. If you didn't get this box down here and the market's run, I don't know what this is, 12 handles, 50 ticks, you can't chase it up here because you know what? It's eventually going to do this. Why is it going to do that? Why is the market going to do this? How can we confidently say that it's going to do that with any certainty? What are the forces in play in these markets that cause them to always go like this, right? Oops, what am I doing with this box? It's getting a little crazy on me here. You know, they go up, they go down, they go down, they go up, they go up, they go down, go up, and then they pull back. Why? Profit taking, right? Short covering, right? Okay, what are these bars doing right here? Uh-oh. What just happened right here? Is this a mid-band trade, yes or no? Setting up right as we speak on these bars right here, right as we speak. Mid-band trade, yes or no? Right here. I'm showing you the bars as they came in. Right here. Yeah. Textbook. This is a textbook mid-band trade. This would have been an up trade. I think we said that, as I recall. I said if that bar, as the let me reconstruct it real quick for you. We missed this. Deer in the headlights, took off. We made money on the shorts over here. We made some money over here. We caught a couple scalpies, a little short, a little short, a little short. So we were actually going pretty good, somewhat complacent, looking for a short here. We missed this. Gazonga takes off 50 ticks. It's going to happen. Okay? If you box it both ways, you caught the first leg. A lot of times you don't catch the first leg. You patiently wait. Profit taking brings it back to the sweet spot, which was the mid-band. Sits right on it. Sits right on 98. I mean, I think it went, the deepest it went was 97, 96 and a quarter, 3/4. That's just a textbook mid-band trade. I don't know what words to say. You put your initial stop right under here. There's almost no risk to it at all. What is that, 4 ticks? 4 ticks of risk? I put 4 lot on here. Rode it all the way up. It stops right here, Manny. Extremely tight stop. If you put your buy orders right at 98, you would have been filled when it hit these bars right here. The wick of this one probably didn't get it. These bars, or you could have boxed it, however you boxed it. You could have boxed it here. There's tons of ways to put a region box on it. By hook or by crook, you were long. If you had a lower region box down here, you got filled on that bar. If you had a bar region box over here, you filled on that bar. If you waited till later and put a region box here, you were either filled on that bar or the next bar over here, depending on where you actually drew it. Well, in the case of the long trade, I like to engulf the candles based on where they're, let me blow this up and talk about that. If you are an early adopter is somebody who sees a mid-band trade early and starts to draw the box early. A lot of times you'll get a jump on a trade that may or may not take off quickly. And it really depends on how you drew the box. Let me show you the different ways to do it. One way to do it would be to use the tops of the candles right at or near the top of band 5, right here. In which case, it's quite possible you would have been filled long on one of these 2 bars right here. Now, you would have felt some heat. Your stop is always going to be underneath. It's usually 12 ticks. It's going to be underneath the bottom of band 4. Let's say hypothetically you were filled at 2,500 even, and it came all the way back here to 96 3/4, which is, was that 3 times 4? Right at 12. You're right at 12. You don't go 12 or 13 or 14 ticks would have kept you in that trade. If you stopped out, if you had a tighter stop at maybe 10 ticks and it popped you, you could have reboxed it here. And then been filled long again on that bar right there. Now, if you didn't start boxing it until here, then you were never filled over here, and you waited and you boxed it as it went under 98 here. The trader who waited for that would be filled long on this bar right here. And the stop would still be in the same location down here. So your risk is much lower, right? You would have been filled at maybe 98 3/4, something like that. Or if you had a buy order sitting right on 98 itself, you did feel some heat. The late adopter, which is somebody who, if you're this particular type of trader, wait until the market sort of jostles around here a little bit. Maybe you didn't start boxing it until over here. Then you wouldn't have been filling until this bar right here, way up at not in a quarter. Okay. Sometimes what you're going to find is, and this is part, I would almost characterize it as sort of part art, part science, in the fact that each box in and of itself is somewhat unique. You will see repetitive patterns. I really love boxes that look like this because they're so clean and clear, and the bars are all kind of respecting the swing level, and it's sitting right on the midband. This would be like my favorite go-to trade right here. Right there. That's my favorite go-to trade by far, no question about it. This one was a little tougher. There was actually 3 different spots to box it, just like I show right here. So as you can see, the market took off. We rode it all the way up to here. This is right where it stopped out. If you had looser stops, you rode it down into here. And it started to go deeper. So what was this trade worth? Okay, well, let's say you didn't get filled until this bar over here. And you got out right there. So looks like this is not in a quarter, maybe, something like that. Let's use an even number. Let's say not even. And then you got out at, let's keep it real simple. So I have to break my calculator out here. 09. How much was this trade worth? 9 handles, 9 points. Let's say that you didn't take any of these trades. You didn't get these. You didn't get the shorts. You missed the long. And you boxed it in. And you got one trade the whole morning. And it's at 7 o'clock, 7:10 actually by the end of the trade. I stopped out around 7:09, 7:10. Just this trade. This is all you took. How much is that trade worth? $9 points, right? Didn't we say 9 points? 9 points is 9 times how many? Oops. 9 times 4 is 36, yes? Okay. One lot, I'll just do a couple of these. 9 times 50, isn't it $50 a point, remember? Right? 9 times 50 is 450. 2 lot. 900. You can do the math, 3, 4, etc., etc. I put 4 on it. Now, there's other ways to manage this. You trail it up with stealth in line 6. You don't have to ride all 2 or 3 or 4 lot or more, whatever, the whole way. There's strategies that I'm not going to get into all detail. It's not the purpose of this webinar, but there's a teaching that we do where you take a scalp. If you put a 2 lot on, you scalp 10 ticks, lock down the coin, bring your initial stop to 2 ticks behind break even, and then trail the rest. There's all manner of different ways to manage that. We're not going to get into that. That's not. We're here to cover mid-band trades, okay? But there is different ways to manage it. You don't have to let the whole 2 lot or 3 or 4 lot go the whole way. You can peel 1. You can peel 2. You can have 2 runners. You can have 1 runner. Needless to say, whatever you took on this one was extremely profitable. We called it ahead of time. It's perfect. That there were several places to get in. There's no reason not to take this trade. This could have been your one and done. How many of you, if you had 1 or 2 lots on this, would have been done with that one trade only? Show of hands. You made 450 or 900 or something in between. Like, say 675 or whatever. Hit your goal for the day. We call that one and done. One and done. Nicely green, turn off the machine. Most of you people have been here, some of you in here for 9 years have been saying that, right? Oh, you got stopped on it? You didn't re-enter? Yeah, that's what so you got stopped out, huh? No? Well, it's tough. I mean, if you got sucked into the trade and you had a tight stop, you had to get back on the horse because it gave you another shot right here. And it sat here for a while. I mean, I know it's hard to do. If you get popped, the hardest thing to do is get right back in. But sometimes you just got to get right back in. You got popped too on it, John? What happened? You get sucked into here? You didn't get in at 98. You got in way up here. And then would you have like a 10 tick stop or something? Stopped out here, and you did not re-enter? Yeah, it was dawdle dinking around here, no question about it. Sometimes if you're an early adopter, this can happen to you. You got to put your stops down here, and you're going to feel some heat. You're going to feel some heat. You got to be able to accept the heat. You got to put your stop just under the bottom of line what is this, band 4. Yeah, stop's always going to be down there. You see if it's too tight and you see your stop here and it's coming to get it, I rarely recommend dragging it down, but you got to give it a little bit of wiggle room. And you would have felt a lot better when it came back up into here, and then you could have ridden the whole thing out. Okay, Greg, you got to take off? Yeah, we're right at 6 o'clock. Okay, Lewis, I see a lot of people got to take off at 6 o'clock. Okay, I'm gonna go ahead and wrap it up. I think there's one last question on the exit itself. Now, oh, what happened to my trade? Oh, here it is. Okay. All right. Okay. So, I don't know why there's not a stealth here. Most times, can you see that? Okay, let's look at 2 trade exits here. And I'll close on this. I'll close on the trail stop approach. That help you understand it, Cross? Talking in detail about the boxes themselves and how they work, where they're at. I know, it's easy to get, there's so much information coming at you on 4 different charts in the room. It's easy to get distracted, right? We talked about selective hearing. If you're only trading gold, then you just look at the gold chart, right? You just listen to gold calls. If you're trading ES calls matter. Other ones don't. They're not relevant. Russell calls on an ES chart, if you're just trading ES, it doesn't matter, right? If you're trading crude oil, and you get a Russell call, it doesn't matter. It's not relevant to the trade you're taking. So I'll give you that. It's a tough thing to do, to learn what's called selective hearing, where you just listen and focus in on what's being called on your own instrument, right? Part art science in the trail stop techniques, because a lot of times they'll come in the wick stealth and the wick line 6, and then give you another 20 ticks. Okay, so we normally advocate going at least fading stealth in line 6 by a couple of ticks on your trail stop. So the trail stop on this one will look something like this. Trailing it up. See how I'm following stealth in line 6? Trailing it up, but I'm fading it by a couple of 3 ticks, letting it wiggle around, letting it wiggle around, letting it wiggle around. And that bar would have probably got you one of these bars right here. Similar condition over here. Here's stealth. Here's line 6. Comes up. You're a couple ticks behind it. Got you right there on that bar right there. Any final questions? I'm going to stop the recorder.